Although August is traditionally considered a slow month for the US financial market, stocks suddenly experienced a roller coaster ride after an unexpected move from rating agencies. Hardly had investors cheered the news about the slowing inflation and the strong US economy. Then a sudden cut of the US credit rating and some of the country's banks came up. This is a pretty worrisome sign, although it's still too early to declare the second banking crisis. Analysts at InstaForex have already analyzed the situation and are ready to present the overview of the US trading session. Wall Street opened this week with moderate gains on a Monday, as major stock indexes managed to recover from recent losses. By the close of the session on a Monday, the Dow Jones showed an explosive jump of 407 pips or 1.16%, logging its biggest daily gain since June this year. The Nasdaq added 0.61%, while the S&P 500 rose by 40 pips to close at 4,518 points. The pre-market rate on a Monday came with new worries about the unstable banking system. Against this backdrop, stock futures lost between 0.9% and 1.1%. As for the benchmark S&P 500 index, it's expected to trade in the range between 4,440 and 4,500 points. The US stock market closed the day in a positive territory. The macroeconomic background was uneventful, and Fed officials made vague comments about the future policy. Besides, investors jumped at the opportunity to buy stocks at the lows. Amid the lack of important reports, the market was looking for signals from the Fed officials. However, they gave no hints to focus on. New York Fed President John Williams expects interest rates to start falling in early 2024. Fed Governor Michelle Bowman said more interest rate hikes would likely be needed to bring inflation down to the 2% target. Despite some sell-off in Apple and Tesla, the Nasdaq index managed to cut the losing streak of 4 previous sessions. Major sectors of the S&P 500 gained in value, with the communications, services and the financial sector having the leading position. As for separate stocks, Berkshire Hathaway advanced by 3.4% to reach an all-time high after the company reported that its quarterly profit had exceeded $10 billion for the first time on record. Shares of vaccine makers BioNTech and Moderna fell by 7.5% and 6.5% respectively. BioNTech said it was cutting its budget for drug development, while Moderna suffered a decline after the investment bank lowered the company's target price. On a Tuesday, Wall Street is again facing a huge cloud of doubt and fears, and US stock index futures fell after Moody's downgraded the credit ratings over several US small and medium-sized banks and said it could downgrade some of the country's largest lenders. Moody's has cut the rating of 10 banks by 1 notch and placed 6 banking giants, including Bank of New York Mellon and US Bancorp, under review for possible downgrades. The ratings agency said that rising funding costs, a possible decline in deposits and lower profitability pose risks to the banking sector, which suffered the collapse of 3 lenders earlier this year. The data caused instant selling in the segment and falling indexes. Regional banks are a source of financing for small and medium enterprises, and their stability is an important factor in the growth of the U.S. economy, while the overall outflow of deposit financing driven by quantitative tightening slowed in the second quarter. There remains a significant risk that system-wide deposits will resume their decline in the coming quarters, Moody's writes. The shares of Bank of America, Citigroup, and JP Morgan dropped by more than 1%, although their ratings stayed unchanged. And Bank of New York Mellon and US Bancorp lost 2.3% each. The banking index has lost 1.4% so far this year, compared with a 17.7% rise in the benchmark S&P 500 index. As for the fresh macroeconomic data, today markets will focus on the U.S. trade balance. The U.S. trade deficit narrowed to a 3-month low of $65.5 billion in June from $68.3 billion in May, which was almost in line with the market forecast of $65 billion. Imports fell by 1% to the lowest level since November 2021 due to lower purchases of computers, fabricated metal products, crude oil, and art. Exports declined by 0.1%, the lowest reading since March last year. Exports of non-monetary gold, precious diamonds, industrial and telecommunications equipment increased. In the corporate sector, Eli Lilly rose by 10.1% after the drug maker beat estimates for quarterly earnings. Tesla lost another 2.1%, adding to the previous session's losses. Shares of the electric car maker are being sold off after the retirement of the company's veteran CFO and potential successor to Musk. In addition, speeches by Philadelphia Fed President Patrick Harker and Richmond Fed President Thomas Barkin will complete the picture later in the day. In the currency market, today was no less hot than in the stock market. In the morning, data on China's trade balance led to a sell-off in the Australian and the New Zealand dollars. The euro and the British pound followed suit. Against this backdrop, the US dollar index recovered to 102.70, but retreated closer to the US market opening and traded at 102.60, or 0.5% higher. As for the forecast, it's likely to trade within the range of 102.50 and 103 points. On a Tuesday, the US dollar strengthened after data from China showed a significant decline in exports and imports. Imports fell by 12.4% from a year earlier, and exports dropped by 14.5%, which is another sign of the country's fragile economic recovery. The indicators made investors fear weakening demand and a global slowdown in the global economy. Against this backdrop, the Australian and New Zealand dollars lost around 1.1%, but later trimmed losses to 0.9%. The British pound slumped by 0.6% after a survey showed that British retailers posted their slowest sales growth in 11 months in July, and the euro also showed bearish momentum and dropped by 0.5%. Meanwhile, the Canadian dollar was also hit. The commodity currency instantly responded to the data and declined following the Kiwi, Aussie and the oil quotes. The dollar-loonie pair soared by 0.89% and reached the May lows at 1.3480. The Canadian currency is likely to trade between 1.3430 and 1.3510. And today, fresh data on Canada's trade balance reflected the largest deficit since November 2020. Canada's trade deficit totaled 3.73 billion Canadian dollars in June, higher than the forecast of 2.9 billion Canadian dollars and the previous month's deficit of 2.68 billion Canadian dollars. Exports fell 2.2% from the previous months to a nearly 1.5-year low, with 9 of 11 product groups posting declines. Meanwhile, imports fell 0.5% in June after rising 3% in May, mainly due to lower purchases of energy products and pharmaceuticals. The data from China significantly affected the loonie, sending oil prices tumbling, and Brent lost 1.5% and fell to $85.10 per barrel, and WTI plummeted by 1.9%. As for cryptocurrencies, they are withstanding amid the turmoil in other markets. It seems that investors remembered that Bitcoin's growth was caused by the March banking crisis and decided to buy a safe haven coin. Bitcoin jumped to $29,500 amid worries over fiat money, but slowed down closer to the US session. BTC was trading at $29,350, adding 0.7%. Altcoins added 0.4% and 1.5%. At the same time, Binance lost 1.2%. The worse the pillars of the classical financial system do, the better the cryptocurrency market does. Investors learned this fact back in March, and now they seem ready to repeat the crypto rally. In addition, PayPal's introduction of the PayPal USD digital currency on Ethereum technology may indirectly indicate the adoption of digital assets by major financial institutions. Nevertheless, a new crypto rally is possible, but we should not forget that for now we are talking about ratings, not about a crisis or new bankruptcies, so there are no solid grounds to be optimistic. In addition, Bitcoin is struggling at $29,500. If the asset manages to settle above this level, it may soar to $30,000. Otherwise, the cryptocurrency may remain within the range of $28,900 and $29,300. Make profits with the InstaForex and keep track of market news on the InstaForex TV channel. Leave your comment down below. And it's very important for us to understand your trading interests and strategies. And see you soon!